Hello, I'm Eithne Treanor and welcome to Oil Market Update, brought to you by Pipeline Oil and Gas News. The commodity market took a beating towards the end of May, sending oil prices down to their lowest level this year, with Brent falling below $70 a barrel. The big fears on the horizon include the uncertainty about the global economy and particularly what that means for energy demand growth. The US-China trade war standoff has dampened investor sentiment and rattled the financial markets. Mid-month, the US increased its tariffs on $200 billion worth of Chinese goods from 10% to 25%. And the gas market felt the brunt of the growing tensions as China raised US LNG tariffs. It's been reported now that only 2 American LNG vessels have gone from the United States to China this year, one in January, the other in February, and that's compared to 27 in 2018 before the start of the trade war. The U.S. Energy Information Administration sees LNG exports from the U.S. currently just below 50 billion cubic feet per day, with growth expected to almost double by 2050. The US is now the fastest growing LNG exporter in the world, and China the fastest growing importer of liquid gas. OPEC held its joint Ministerial Monitoring Committee meeting in Jeddah in mid-May, with the chairman, Saudi Arabia's Energy Minister Khalid Al-Fallah, saying he was pleased with conformity levels on the agreed production adjustments. He cautioned that there were great uncertainties ahead, and that all producers, including Russia and other non-OPEC members, were looking at a range of other options for the upcoming OPEC summer meeting. Finding consensus about how to replace Iranian oil that's currently off the market will also be top of the OPEC non-OPEC agenda, as well as the growing geopolitical concerns in the Middle East. Now, oil inventories are on the rise in the US, with a build-up of almost 5 million barrels as we close the month. American supply continues to increase, with many analysts looking at production at around 13 million barrels a day by the end of 2019. It's this strength in the US shale market that had oil major Occidental upping its bid to $38 billion for the Permian player Anadarko earlier this month. The industry has not seen such a mega merger for years, and this deal will actually double Occidental's daily output to more than 1.3 million barrels. Analysts are expecting more investor interest in consolidation in the Permian, but the industry remains on hold for the next mover. Now, as we look to the rest of the year, any further fall in oil prices could prompt OPEC and its allies to extend their production agreement, particularly into the second half of the year. All eyes, of course, on that OPEC summer meeting, just to see what the agreement the organization comes to in terms of production, and also just to see how that decision can satisfy consumers as well as producers.